In this video, I'm going to show you how to have a 90% win rate with any trading strategy. Stick around till the end if you want to also receive a free expert advisor. To start off my video and illustrate a point, I want to show how you can have a 50% win rate with any trading strategy. Let's assume price is at this level. You can pick any number you'd like. And we set a take profit $10 away and a stop loss $10 away. Let's assume for this example that we're in a perfect market environment with no commissions, no spreads. It's a purely theoretical example. How often do you think price will hit the take profit versus the stop loss? A pretty logical answer here would be 50% of the time it will hit the TP, and 50% of the time it will hit the stop loss. And this makes perfect sense because let's say it hits the take profit 40% of the time over the long run. Then you would simply reverse your take profit and stop loss because you would then be able to have a system which wins 60% of the time with a one-to-one risk reward, and therefore you would have a very profitable system. So what this example is meant to illustrate is that in a perfectly random scenario, you can change your win rate just by changing the ratio of your take profit and stop loss. We can move over in that case to the following example. And this shows how it's very easy to have a 90% win rate with any trading system just by manipulating where your take profit and stop loss is. And this is why you should never place too much emphasis purely on win rate. What matters is not just the win rate, but expected value. To illustrate my point, let's say if we were to make the take profit only $10 away, but all of a sudden we place our stop loss $90 away, so it's 9 times larger, how often do you think in a purely random scenario we will hit the take profit versus the stop loss? This gets a little bit trickier than the first example, but I want you to think about it. Assuming a perfect market environment, this will always converge towards break even, right? Because if it consistently lost money, you would just flip your take profit and your stop loss, and you would have a system with edge. Therefore, what is break even in a 1 to 9 risk reward? The answer, and I can pull up a very simple risk reward calculator to illustrate the point, would be 90% of the time it will hit your take profit, and 10% of the time it will hit your stop loss. However, in this scenario, we would still very much be at break even. The reason why I want to demonstrate this point is when you look at any trading bot, you have to not only look at the win rate, you should look at whatever the average ratio is between your winning trades and your losing trades, calculate what your break-even win rate needs to be, and see if you're in excess of that. And that is how you demonstrate if a system truly has edge. So, to demonstrate how this point works, I want to show our missile system, which is a system that we've developed here at Prosperity Algo Solutions. As you can see here, based on the equity curve, it's a very profitable system. Risking 2% per trade in the past year, it made roughly a 65-67% return. But to demonstrate my point, I want to go specifically into the backtest results. In Missile, typically, we use a take profit of, or a start trail percent of 0.05% and a stop loss percent of 0.25%. So in theory, this is a 1 to 5 risk reward system. If we go back to our trusty risk reward calculator, let's say we use here a 1 to 5. Very simple math, but just to demonstrate a point, we have to exceed 83.33% in order to have a profitable system. Missile actually has a better than a 1 to 5 risk reward as it uses a trailing stop loss. So we can see here that the average profit trade is $67.87 and the average loss trade is $285.52. So to quickly pull out my calculator, that would be a 0.23%. So that is a little bit better than 1 to 5. But what's our win rate? Our win rate here on average is 85.61. Therefore, not only are we exceeding the necessary requirements of win rate under a 1 to 5, but we're also having a risk reward which is better than the 1 to 5 base case scenario. And that would lead to an equity curve that looks like this, where you can see that the losses are bigger than the wins. So you have a string of wins and then loss, string of wins, then loss. However, because you have a consistent edge, this ultimately leads to a very, very profitable system. Just to explain how the system works, Missile is based on impulse candles. So from this screenshot of a visual backtester, Missile will detect these large impulse candles in the market and use pending orders to snipe small profits. And generally speaking, what I've seen from developing many scalping systems is using these inverse risk rewards, which is counterintuitive to what a lot of discretionary traders do. You actually get a far more profitable system. However, you are free to test different inputs and try out whatever you'd like. Also, just to show that this backtest was based on every ticks based on real ticks, so it is accurate, and anecdotally from forward testing, it actually looks a lot like the backtest looks worse than reality. This did not really happen in the forward testing. Just something to keep in mind. So, the point of this video was to show you what you really need to look at when observing an expert advisor. So don't just pay attention to win rate, pay attention to edge over win rate. So always go to your backtest, figure out what your average winner is, what your average loser is, and look for an edge over that. That's really all that matters. Positive expected value. Thank you very much, and please stick around for the following short clip where we'll share a free expert advisor with you. Take care. Before you click away, if you're looking to get a real expert advisor, here at Prosperity Algo Solutions, we're currently offering our Golden Time Bomb system based on automating the London breakout and opening range breakout 100% for free. Watch the pinned video to find out more and to get access.